All right, you are looking at a daily chart of the Nasdaq, which you can see is in a correction here. I just want to point out, oh, by the way, today is Saturday, August 3rd. Welcome to my weekly review. And I just want to get right into it because there's a lot going on and there's a lot to break down here this week. Speaking of breaking down, the Nasdaq is corrected 11%. So we've already had an 11% correction from the peak of 18,671 on July 11th. We got these numbers etched in my brain. Yeah, there it is, July 11th, 18,671 to the low on a Friday, which was a 16,582. Is that going to be the ultimate low, 11%, or is it going to go down further to, it's 200? Is it going to rally right back through the 50? You just got to wait and see. You got to be open-minded and flexible here at this point. But, 11%, I mean, unless we're going into a bear market, 11% is a pretty healthy correction. Back in March and April, we had a 8% correction from the high of 16,538 on March 21. It made this low here on April 19th. So it was a 1 month exactly correction of 8% down to 15,222. We had a nice rally, 13-week rally, and that's about, that's a long rally, a 22% gain, and now we've given 11% back. So that's 50% correction from this move. So I don't want to make predictions or anything, but my intuition tells me we're getting pretty close to this selling here. Got to look at the weekly charts, and on the weekly, I just have to say that the uptrend is still intact. It was getting a little frothy. It's still in the middle of this channel. The QQQs were selling off. The Nasdaq was selling off, and the Russell was the leading index. I'll get to that in a minute. And then, because this was a crowded trade with the Apple and the Microsoft, the Magnificent Seven, and they were selling off, and there was a rotation into the smaller cap stocks. And then the end of last week, everything fell apart. But, you got to respect the selling here. You got to respect these gaps lower. It could gap lower again, slice 16,000 on Monday. You don't know. You definitely have to respect it. I've got to go to a monthly chart here. July is typically, seasonality wise, July is a strong month, and that just shows you that seasonality doesn't always work for you. Nothing always works for you in the market. The Nasdaq was down 3/4 of a point in July, and now in August, just 2 days, it's 4.68%. So August is having a terrible month, just 2 days in. All right, I did mention the Russell. I'll just go to the IWM, and you could see the gap lower. This is healthier because it's above its 50. Gosh darn it, Marty. I've got to go back to the Nasdaq and just show, at this point, it was, what was it? It got 6, 7, 8% above its 50. There it is, 8.9% above its 50. We knew it was getting too hot and frothy there. And now it's 4.6 below its 50. So 6.1% above this 200. It can make a trip to the 200 at any time. And, you just got to be flexible and open-minded, as I say. The IWM is healthier. Why? Well, because it's above its 50, just 0.5%. And it could certainly slice it. Last week, people always want to know why. Why does it go up? Why does it go down? And you just can't argue with the market. The price is price, and only price pays, as our friend Brian Shannon likes to say, and that's true. It appears that they wanted a rate cut on from the Fed last week. I was kind of surprised by that. I wasn't expecting a rate cut. I don't think anybody was. But the market, when Powell speaks and they make these decisions, the opposite move is usually the right move, right? So July 31st, he speaks and the market goes up, and then it opens up on Thursday and looks like, woohoo, we're off to the races. And then what happens? Psh, we just slip sliding away here with the jobs report on Friday. I don't think one jobs report means anything. Yeah, we know, the jobs market is slowing, and that's kind of what all these rate hikes are designed to do. So the market's just going to have to deal with it. The Fed's not going to be lowering rates until September. So we'll just see how the market responds. The Fed acts, and now the market responds. And so it kind of threw a tantrum last week. Anyway, that's enough with the indexes. It just kind of goes to show how hard it is to trade when the indexes, you don't have the tailwinds of the index. It makes it very challenging. But I'm going to go through some stocks that are, I'm going to stay positive today because, I'm a positive person. I'm always looking for, the bright side of life, as Stevie Ray Vaughan would sing. All right, this is Apple, reported earnings. 11% earnings growth, kind of a surprise here. It's back on the positive path here. 5% sales growth. Pull back to its 21. It looks pretty good, actually. It's a weekly review, so I got to show the weekly chart. And there it is, this double bottom, base on base pattern, and ripped higher, made that high, sold off, and back to a moving average. So this is, in comparison to the Nasdaq, this looks fantastic. Microsoft, not so much. Slice its 50. This is why, I just sell the stock when they slice their 50. Why? Because usually they go lower, and if they don't, if they rally back through, I can just buy them back. So there's, this thing could continue going lower. I know it's near its 200 and it bounced on Friday, but we'll see about Microsoft. Their report was pretty good too, but like I said, the trade just got a little frothy, and then relieving some of this pressure that, it's healthy longer term. There you can see the earnings line, gradually trending higher and the stock going lower. So just kind of like a mechanical thing. It's just got overbought, as they say. If you believe in overbought and oversold, what does overbought become more overbought, and what's oversold can become more oversold. But anyway, let's take a look at some of these other names. Meta Platforms reported last week. Pretty good report, but still stuck at that 500. Jesse Livermore 500 number. Closed below its 50. Rallied back through on earnings and then closed below it on Friday. It's just kind of stay away from this stuff. Google is just an avoid below its 50. These things need to correct. They've had long runs and they just need to form bases, and there's nothing wrong with that. Tesla is one of the stronger ones with Apple. Now it's pulled back to its 50 on Friday, closed a tick below it. So yeah, I mean, their earnings report was pretty bad, and they didn't receive any downgrades or anything. So I don't know. The market they like the Tesla. NVIDIA sliced its 50, tried to rally back through, and I thought, okay. Wednesday had a nice day, up 12%. I thought if it could rally above that 120 level, above its rising 50, we're back in the game, right? But Thursday and Friday, there were other ideas. There it is. There's your big move on the gap higher and rallying, and then it opens up on Wednesday. Looks like it's going to trade higher, Thursday, and then just sold off all day. Friday gapped lower, made that new low there. I said earlier in the week, if you put a gun to my head, that would be the low. And what does it do? 2 days later, it makes another lower. 3 days later, that low of 102.54 was undercut on Friday, 101.37. So this is making lower lows, lower highs, and that's the definition of a downtrend. Probably just forming a base. I know Elliott Management came out and said it's overvalued, but their opinion is just like ours, worth nothing. You just got to listen to Mr. Market, and Mr. Market's going to tell you what NVIDIA is worth, and right now it's 107. So we'll see which way that one goes. They're not going to report earnings for a little while. I'm going to go through a couple of negative things, and then I'm going to get back on the positive path. The tech and I just showed you the Mag 7, out of sorts, and then the semiconductor names really got hit. This is AMD. Looks like it's, going to form a double bottom base here. Pretty good earnings. They're back, 19% earnings growth, 9% sales growth. Market doesn't care. It's got a 214 billion market cap with about 35 billion in sales. So still a pretty expensive stock. They need to grow 20% to justify that type of evaluation. Intel, man, these guys blew up. People hold Intel for the dividend. This thing, if you just look, this was the king stock back in the go-go 1990 days, and then topped in 2000, and it's just been pretty rough ever since. Intel in the Dow Jones 500, Dow Jones 30 probably needs to get the boot. and replace that. And that's why those indexes can keep going higher, is because they trade out the laggards and bring in some of the stronger names. KLA 10 core, KLAC. Yeah, slice the 50 and it's adios muchachos. ASML, these guys have a monopoly on their business and they just can't get it together. These big red numbers down here, you would expect the stock to trade lower. Yeah, the earnings line going south, and so is the stock. So semiconductor equipment, this is a big kahuna in that group, and it's telling you it's not doing well, and that's a cyclical business. MRVL, another fabless name, man, just slice the 50, slice the 200, adios muchachos. Qualcomm, pretty good report. They were talking about the automobiles doing well, but you know what? The market says, no, thank you. Got the Matombo treatment, slice the 50. You see at the moving averages, it keeps getting the Matombo treatment. And those moving averages are trading lower, so you got lower lows, lower highs, just going lower. That's the definition of a downtrend. So Qualcomm is a void. MU is one that's interesting to me because this is this very cyclical business, and these cycles last for years, not just days or weeks or even months. And you could see the down cycle and now the rebound. So this lasted, 6-8 quarters, and now I expect the uptrend to last. And the market's not having it; it's selling off, and it undercut its 50 and it's 200 now. It has a 42% correction, peak to trough here, which is pretty darn steep in a very short period of time without any news. Broke out of this base, ran higher up to 157. Did fill this gap here. It's got other gaps below. We'll see if they fill. At some point, though, this thing's going to be a buy. It's one that I'm looking at to buy. And like I said, if you look at the weekly, this move is pretty intense, pretty harsh. Like I said, you must respect the selling, but at some point, the selling will abate. You'll see some capitulation in the selling, and the stock will stop going down, flatten out and start going back up. So that's just what I'm watching for. I'm patient that way. Just keep it on your watch list on the back burner, because these guys, if you look at their their growth here, they've got tremendous growth coming. Like I say, it's a cyclical business. You're looking at about 40 billion in sales coming, and it's 100 billion market cap stock. So you're looking at 2.5 times sales. This is not an expensive stock, and that's why I'm watching it anyway. I'm going to move on. Enough of the negative crap. I've got to go to the medical device systems. Da Vinci is a marvelous machine. Intuitive Surgical owns it, and the elective surgery business is, back in vogue. People want to look good, and it's not only just that. It's hip replacements and heart and just all kinds of different surgeries that these guys do. And you can see the growth numbers here. We like double-digit blue numbers. Earnings line heading north, stock heading north. So there are stocks out there to buy. There are stocks to own. Not everything is getting crushed. And that's kind of the point of my video this weekend. This is TMDX. It just, played possum here for a long time, just trading sideways after that, recent gap after earnings, went sideways for a long time, gapped on earnings Thursday, and then just pulled right back into that little box here. So I'm looking, cooler heads are going to prevail. The market is going to come back to reality, and it's not going to sell off forever. And I think when the market starts behaving better, these stocks that are holding up might perform a little better. It's just a tough tape, but I'm just trying to show you some names that are doing well. CDNA. Had a nice earnings response on Thursday, had an inside day on Friday, but that looks pretty good to me. It's way extended from its moving averages, but strong stock. I'm trying to show you strong stocks. I'm trying to be positive, and not everything is doom and gloom. There were some really hostile people this morning on Twitter when I was posting. Man, everybody's way too negative. Everybody's in fear. The VIX is at 30. The world's coming to an end. Good grief, people. Get a grip. This is ResMed, bounced off its 50, holding in this, I guess you could call this a box, right? just within this box, 180 to 220. That's a wide range, but yeah, earnings line going north. This thing is up 13.5% last week. So, I know what you're thinking. It's like, okay, the market hasn't got to these ones yet. Wait till next week and they're going to kill them all. You can't think like that. You just got to, somebody asked me to look at this stock. Stryker, medical product stock, just obviously consolidating within a base, below the 50. I don't like that. In between the 50 and the 200. Earnings on Halloween. So they already had earnings and they have, solid growth, solid margins. Once again, this is in the surgery equipment group. I like the company. I would like the stock a little better above the 50 here. But all things considered in this tape, not bad. Maybe it'll bounce off the 200 rally back to the 50 if that's what you're looking for to get into this thing. Or if you've been holding it for a long time, this is one of those stocks that's been, big winner for a long time. If I go back to the monthly, Stryker is a fantastic company. So yeah, it just depends on your time frame and how long you're holding it and what your plans are. But Stryker is definitely a good company. Abbott Labs, another good company. It's got this 193 billion market cap, so it's a big company, but consolidating in a base above its moving averages, was up on volume 4 days in a row. So, I'm not going to ignore that. It's a big company, like I said, but yeah, I mean, up 5.7% last week when the Nasdaq was down, what did I say, 3.65% or 3.35? So yeah, those are outperforming. COR, this is one that I'm going to put on my ready list, but it's just getting too extended here. Broke above a downtrending line and with volume. Last week had a heck of a week, so I'm just trying to show you some strength there. 8.76%. So that's a nice week. I know the chart's really, it's all over the place. A little messy here, but you can't deny price. Like I said, our friend Brian Shannon talks about price. Price pays, and this one's paying. So I have to show you that one. TMO, Thermo Fisher, another one of these medical research stocks. This is another big, 235 billion market cap, just kind of going sideways. You can see the double bottom base and then the breakout, and it's holding its gains up 1.5% last week. So yeah, that's like I said, I'm just trying to be positive, trying to show you that not everything is bad here in the world. So this is HOLX, medical systems equipment stock, and these stocks are doing fine. So there it is on the weekly, up 6.3% last week, breaking out of this base, had a 3 weeks tight pattern and a nice week last week. So, okay, that's it for that. I've got to go to, I did mention that these small cap stocks were doing great. The financials, they were anticipating, I think, the rate cut and then, didn't get it. So then these things fell out of bed. This is HBAN, Huntington Bank shares, 19 billion market cap, and broke out and then returned to its 50 on Friday. So we'll see where it goes next week. It was just risk off. As soon as Powell didn't, cut rates, it was risk off, and they just sold everything. And I showed you earlier, the Russell 2000 is just, at its 50, and it had a great deal of pain last week. This one was down 9% for the week. So if you got a full position in that, you're down 9%, you're feeling that in your portfolio. So sorry to say. WAFD, I got one right down the street from me. This is a another one of these regional banks. You can see this big base here broke out, now pulled back. So we're going to see next week which way these things go. This is a 2.6 billion market cap. It sliced its 21 on Friday. So like I said, you got to respect the selling. And this one could make a trip down to the 50. You don't know that you could see the relative strength line heading south. So like I said, respect the selling on these. Probably not done. We'll see. This is Fidelity National. FNF is the ticker symbol. This is an insurance company. I'm going to get to some of these insurance groups because they're looking pretty good. This one just popped out of a base and pulled back to its 10. Gallagher AJG is a insurance broker, and you can see this isn't what trend traders like. Like I am a swing trader, trend trader. And this is what I like when a stock, breaks out and just rides its moving averages. Those are easy holds. not all this volatility that's all over the place. That's my enemy, all that volatility. Some people like the volatility because they can buy low, sell high. That's not my strength. And I like stocks that are just quietly grinding higher. Like Gallagher, if I'm mentioning insurance, I got to mention my favorite ticker symbol, BRO, another one that, broke out and it's just trending higher as long as these moving averages are trading higher and the stocks moving higher, you're making money. So I know what you're thinking, like, man, the market's going to get these. These are looking too good, but we'll just have to wait and see. The insurance group looks pretty good to me right now. Things can always change, of course. This is Skyward. I had it on my ready list last week. This is one that held up, in comparison to the market. I mean, it was up 2%, while the Nasdaq was down 3.35%. So yeah, like I say, price pays, and this one still to me is actionable. But I know people are really scared right now, and they really took a hit, and I get it. You really have to respect the selling, but I'm just trying to show you some stocks that are holding up well. Allstate, got that, nice base here, pull back to it's 50, then rallied. To me, this one still looks good. You're in good hands with that stock. All right, a couple other ones. I'm going to go back to kind of like financial mortgage related. This is Rocket. Had a nice day on Friday, up 12%. Traded down to its 21 and really rocketed higher, didn't it? Yeah, the closing range was 90% on the day, which is hard to find the way the indexes were trading on Friday. So that's a rare bird. Lending Club, I should be showing you the weekly charts here because it's a weekly review. It was down a little bit last week. You can see it broke out of this base. Earnings line starting to stabilize here. But another one that above its 21 looks pretty good. And then Tree. This is a lending Tree, not lending Club. This one pulled back to its 50. You can see it broke out of the double bottom base, pulled back to the 50, found support, closed 67% of its daily range on Friday. All right, I'm going to move on to the software names because you're thinking, man, every software stock is getting crushed. Spotify is one that I had on my list last week as well. One of the few that did well. I got hammered last week. 2.79%. This is one that I do own. Fortunately, it helped out bear some of the damage. Also, if you want to hedge, when the market's like that, you could buy the SQQQs. It helps, with some of the damage. I don't like going short in an upturning market, but last week it was beneficial. Spotify just really pulled back to its old buy point there. Standard buy point, paint by numbers 331.08. Traded down to its 21, found support, closed at 89% of its daily range. So we'll see what the market has in store for Spotify next week. ZETA, Catherine Zeta-Jones stock, they reported good earnings. They continue to gap up. After earnings calls, and this one did last week, and then got back into that gap zone, which you don't really want to see, but pull back to its 10, and found support on Friday, closed at 88% of its daily range, and that's what I like to see. I mean, buyers are coming in and supporting the stock. Here it gapped lower, traded down, then it was trading up all day. Like I said, 89% of its daily range, even though it was down 4%. And one more, VRNS. This group, this computer software database group, which ZETA is in, and Oracle and MicroStrategy, is one of the stronger groups. It's rated 12 out of 197. So there are some software names doing well. This is VRNS Systems. Reported earnings, gapped up, pulled back to its 10. It closed above the 10 on Friday. I mean, you could see the damage there from $57 on Wednesday. 2 days later, it's at 49. Closed at 51 though. And like I said, 87% of its daily range. So still near that, paint by numbers buy point of 51.74. Just got to wait and see what happens in the market next week. The algos programs turn the sell switch on and they just sold. Maybe they'll come in Monday and say, what the heck are we doing? We're selling some good stocks here, and we're gonna have to buy them back at lower prices. And then GoDaddy, that's my scenario, by the way. I'm not saying that's going to happen, but it could. GoDaddy, computer software, pullback to its 50 and found support a couple times here and closed. I believe the Friday close was near the high, if I remember. Yeah, 87% of the daily range. That's what you like to see, up 7% on the day, and more than 5% on the week. The RS line heading north. So GoDaddy is going for sure. All right, a couple more names before I call it a day. HCA, hospital names are doing well. Medical hospital groups, I don't know what this is indicative of. Hospitals, yeah, 30, it's rated 30. I mean, it's performing better than that, but it's rated 30. Because there's a little bit of a lag there. But THC is one that I like, and it really, gapped higher after earnings, made this high, 154.88, then pulled back to its 21 on Friday, down 4 days in a row, went up big with big volume, sold off on lighter volume. I don't know. We'll see if it finds support there at that 142 area, which is the 21. So that's one that I'm looking for, that could be, a potential buy for next week. THC, and the last one in this group that I'm going to show is United Health, Universal Health System, UHS, gapped out of its base and held its gains. That's what you want to see, just form a little shelf while the rest of the market falls apart. It was just flat on the week. You can see the earnings line heading north. And I lied. I'm going to show you one more, because SEM was one of those ones that it's doing so well. It's just trending beautifully. It's just a wonderful stock. We're making money, getting supported at the 10. And then on Friday, it's adios, muchachos. It slices everything down 13%. No, thank you. That's just too much volatility for me. 4 billion market cap stock. And I don't know if there was news there or not. They report on the 1st. Wait a minute. Today's August 3rd, so maybe they reported and it just sold off. I don't know. I'd have to look more into that. I'm not really interested in stocks that are doing stuff like that, though. All right, let's move on. Okay, I just want to show you some names here. You can write these ticker symbols down if you want, but I'm just showing you strength right now, and I'm just a random walk through some relative strength. This is Bright Horizons Education. I used to hire all my preschool teachers from Bright Horizons. They were fantastic. My neighbor sends his kids to Bright Horizons, and he loves it. They love it. They have a real nice facility. The teachers are fantastic, prepared to deal with all the all the issues that come up in preschool. Not only the kids and the parents, but the county. The county wants in your business too. So they do a fantastic job. The stock, broke out obviously on Friday, 14% move. We'll take that. Up more than 12% for the week. You can see the breakout here on the weekly. It was consolidating in a base, had this couple weeks tight pattern, and then ramped higher. So Bright Horizons BFAM looks fantastic. So does DNB, Dun and Bradstreet. I'm just showing you strength here, folks. I don't know what these guys do. Commercial services, market research. But it was up nearly 10% when the indexes were falling apart. And you can see that pattern on the weekly. It's too extended here on the daily. What is it? 9.9% above its 10. But on the weekly, you can see the consolidation here, this pattern up near that old buy point there. So Dun & Bradstreet looks pretty good. MELI, this is one you're probably more familiar with. This is the type of stock, the growth stock, that trades on the Nasdaq that, I'm more familiar with. And this gives you some exposure to emerging markets. This is a Brazil company that I guess they reported earnings Thursday and had a nice response on Friday, up 10%, closed near the high of its daily range, 88%. So I'm just showing you strength, folks. I'm not saying go out and buy everything, just trying to show that the world's not coming to an end here with every stock going lower. This is DoorDash, had a nice response to their earnings report. Ferrari, same thing, RACE. You can see it's consolidating within a base. Looks good, though. It is a weekly review, so I should show weekly charts. You can see it's just consolidating in that base there. Does have a little standard buy point there, 442, so it's just a tick below it. Okay, I've got to get to the utility names. This is Wisconsin Energy, and you can see this one was going ballistic last week. Utility stocks going higher. I know what you're thinking, man. Can it get more defensive than this? Up nearly 8% last week, so we'll take that all day long. A couple other stocks in the group, Duke Energy. Yeah, okay, thank you very much. We'll take that. NEE. Duke Energy, by the way, is a DUK. And this is NEE. I'm just showing you strength here. This is up nearly 7% last week. The food stocks have been getting hammered, but this one is bucking the trend. This one in Shake Shack, Kellanova, yeah, had a nice response to earnings, and it's a weekly review, Marty. You got to show the weekly chart, and you can see it just broke that downtrend and up nearly 10% last week. So that's a good move by any metric. This is a pawn shop, Easy Corp, EZPW. And when pawn shops are doing well, that scares me a little bit. What are people doing trading in all their stuff? Anyway, it's showing growth here. It's got double-digit blue numbers here. So, and I showed you the weekly. It's consolidating in a base and gap higher 7% last week. So, like I said, I'm just trying to show you strength wherever it is. This is a REIT, real estate property trust, and this is CubeSmart, had 3 weeks tight, and then went up to 2.25% last week. So this is not a real fast moving stock, but I'm just trying to show you some strength in the market. And the last one is PHG, and that's it for me. I'm out. You can see it's just trying to break out of this little box here. You call it a Darvis box. It tried to on Monday, and then nope, get back in the box. Anyway, that's it for me. Thank you for watching, except for I lie in honor of the great Steve Jobs. I'm just looking forward to some earnings next week. I know you're thinking earnings, they don't matter. The only thing that matters is price, because only price pays, and the market's selling everything, and everything is negative, and it's doom and gloom forever and ever. But we know that's not true. I'm just being sarcastic. If you listen to Warren Buffett, he talks about how great America is. And America's always been great, and we're going to fight through this bad period of time. We've fought through, a couple of wars, many wars. We've fought through domestic terrorism. The market's gone through everything, and it's survived and makes new highs. And so we're going to do it again. Palantir reports. This is pretty essential for the software names in the artificial intelligence group. Same with Supermicro. They report. This week sliced it's wow, 200 last week. I haven't looked at this one in a while. Jeez, how low are they going to take this thing? It was down to 582 on Friday. Now this has got a 36 billion market cap, and they're going to do about 16 billion. You got way more than that next year, and wow, they're going to be over 20 billion in earnings, and it's got a 35, so it's trading about 1.5 times forward sales. I don't know how much lower they can push this thing down, but they're going to report this week. So is Uber. I'm kind of interested in the gig economy. See how that goes. Disney is also reporting, and that's kind of a beacon for the economy. See how people are spending, traveling, taking their families to the amusement parks. Caterpillar, more of a global indicator, global economy. God, the stock's down there. It's 200. Yeah, but the U.S. has one of the stronger economies, and globally we've been seeing a slowdown, but and it's starting to hit the U.S. now. So we'll just see how slow it really does decide to slow, and how quickly the Fed will respond. This is a Dutch Bros. I'm interested in this company. I believe they're taking market share from Starbucks. The Starbucks report was not good. I believe theirs will be good. I'm not saying that the stock is going to make new highs, but I just believe they're going to continue to deliver strong quarters, quarter after quarter for a little while now. ELF, this thing's been battered. It went from $219 to $154. In a very short period of time. So no news. What's it worth? Is it worth 220? Is it worth 154? They're going to report. Maybe it's not even worth that. Maybe it'll go lower. But I'm pretty sure they're taking market share, much like Dutch Bros. But we just got to be, like I say, respect the selling. Shopify, whew, man, they're going to report. I don't even want to look at that chart. Datadog, whew, gosh, these things. just hammered. That's why I didn't want to show you this stuff. But, you sell off before earnings, you have decent earnings, maybe get a little relief rally. Novo Nordisk, no reason for this one to be undercutting. Anyway, the market's going to do what it wants to do. And I believe they're going to report good numbers along with Eli Lilly this week. I was watching Bloomberg, and the Lilly CEO said that there is no more, the manufacturing issues have been solved. And so there's no more shortages of their weight loss drug. So I'm pretty sure the same would go for Novo. I expect those two to report strong earnings. Once again, a crowded trade, got a little frothy, pulled back a little bit, and now they're going to report earnings. So I like stocks pulling back ahead of earnings and not trading at, all-time highs, and everybody loves them. A couple more that are reporting, Vistra Energy. I think you could just take a look at these stocks, and it kind of speaks for itself. The chart is talking, and this is Constellation. They're going to report on the 6th. Traded down to its 200 on Friday. The closing range 41%. Meh. I'm just gonna have to wait for earnings and see which way she goes. But longer term, if the AI, artificial intelligence bull market plays out, these couple of energy names are gonna have to be big players because they need a lot of energy. Same with Duke Energy and WEC that I showed earlier. Anyway, that's it for me. I know it was a long video. There was a lot going on. Stay positive, this too shall pass. If you listen to, Peter Lynch talking about corrections, you're going to have them, and I just showed you in the Nasdaq that we had this 8% correction in the springtime, March and April, and now we have an 11% correction. Is this the start of a new bear market? I don't know. Could it go, down to 20% or more? You just have to wait and see. But like I say, respect the selling. Maybe, the 11% correction, that'll be it, or maybe 12%, and then it starts to stabilize. I don't know. We're just gonna have to wait and see, one day at a time, always one day at a time, always stay flexible, always be open-minded, and always never give up. Thank you for watching.